I'm catching on.
Okay.
Just by you explaining that, it made the world of difference because now
We see in the community, bring it all together now. Now, this is just the overview. I want to make clear to learn more in depth about that options chain, going to buy your contract and how we're in the community. Options contract, there's many options contracts that we can purchase, right? On all of the options contracts, depend, I would say the time frames is the deltas between the options contract. So you can have, so we have three main channels in regarding options contracts. In our watch list, we have a swing channel, right? And the channels, I think I wanted to add in there what these channels are at the top, the descriptions, right? So the swing channel is when we are buying a contract and we looking for it to do what we saying it's gonna do in a day, 2 days, 3 days, 4 days. That's the swing channel. And then the scalp is hours. We're looking for it to do what we're saying it's gonna do in hours, short time frame. We buy something, we need it to do what we're saying it's gonna do within hours. And the day channel is the same as a couple hours or for the day. I have separated the well. We said in this real time, right?
okay.
We said we got Archer Aviation.
Mm-hmm.
Real time. These are real prices, as you see on the right here. See this green tab to the right? These are all prices of these levels that Archer made.
Where
Okay?
you at? You on a chart or you on the
Oh,
graph?
look. All right. So to the left, I have Archer's chart. And right here, I have the watch list, right? And then down here, I have the contract, right? So we're going to go and pull up Archer contract. So look, that's what we have. On this contract, as you can see, it has the chain right here. Remember, all of the contracts stem from this middle price. The middle price is the gut of any options contract. This is the price that we're saying a put contract is going to go down. This will be the price that we're saying. A call contract is saying it's going to go up. These would be the prices. These would be the contracts that you will buy. So the watch list said, hey guys, look for Archer Aviation to bounce and hold above 1113. So now I'm going to go and place a line at 1113. That dotted red line. See that dotted red line we placed right there? That's 1113, right? And the price shows right here on the right side. That red tab price represents this red dotted line. And on the watch list, it said if Archer bounce and hold above that 1113 dotted line, then look to buy a 1150 call contract. I'm gonna put lines to represent our trading day today, so we know what we're looking at and what to count for. Okay, so this was our trading day right here between 9:30 and 4 o'clock right here. So between these two, I'm gonna make them black. Between these two black lines was our trading day. United States trading is from 9:30 to 4 p.m. That's what this inside this box represent. Okay. All right. This watch list said we're looking at this level right here, 1113, for it or this stock price to come to and bounce off of. Come to it and bounce off of. So this is the hour time frame. So each one of these candles represent 1 hour of price movement. So the green one means it opened here, it went all the way down to 1112 and then got pushed all the way up and closed at 1135. That was between 9 o'clock and 10 o'clock. All right. So here I'm gonna go to the 5 minute and you're gonna see more of these candles. It's gonna be a multiple. Okay. So that's where we go and make our entries on the 5 minute candle. Look what we have. So here it goes. That same section. The watch list said all of these candles represent 5 minutes of price that Archer Aviation went to and closed. And then the next one is the next 5 minutes price. Okay. That's all these candles represent price, right? That's all the stock is just prices moving up and down. Okay. Buying and people selling them. When people sell the shares in the asset, the price go down. When people buy the shares in the asset, the price go up. Okay. So that's all the stock market is. Okay. So, so 9:30, this candle was the start of the day. 9:30, it opened here. It went down as low as $11.20. And then it went all the way up as high highest $11.40, and then it came down and closed at $11.27. So once it closed at $11.27 at 9:35, 9:35 started. It opened at right here at $11.27. It went all the way down and closed at $11.14. Our list right there said we are to be looking at the $11.13 level for us to make our, if it holds at that level and stay above it, that's best opportunity for us to go then and buy a 1150. Look at this contract, 11.5, to go buy this contract right here. That means if this stock price come at this and hold above it, so you would have to be here because you would miss this one. It came all the way down here to 1105, and it came up on at 9:45, came back up. It closed at 1112. But that doesn't satisfy our watch list. Our watch list said if it holds above 1113, that's when we want to take action. So at 9:50, it came, it went down, it went all the way up. It closed here at 1120. At 9:50, it closed at $11.20. So now we like, okay, all right, let's see. Hold on. So in the next one at 9:55, it closed at 11:26. But then 10 o'clock came. 10 o'clock came, it came all the way back down and tested our 1113, which it came down to 1115 right here. And this was your best chances to satisfy our watch list. From between 10 o'clock, 10:05, and 10:10 and 10:10. This was the times to buy that 1150 call contract.
Okay. Because it held
1113 and above. It held right there at our 1116 best entry area.
Okay.
On the watch list, look at the watch list. The watch list says the best entry is when that price is 1116. Now coming back over here to these 3 5-minute candles right here. Look what was the price at these low bottom. 1116.
Wait a minute. Point it at it again.
All three of these. So from 10 o'clock, 10:05, and 10:10, it gave you 3 opportunities to buy at that 1116 level that the watch list said that's the best entry.
Okay.
And best entry means it should not come back there, as you can see from here. So if you went, so let's say you didn't go at 10 o'clock, you waited, you was hesitant, you needed to see some confirmation, which we should always need to see confirmation. So we wait for the next candle to come back close to or to it for us to get in it. Because if it did it before it, if it did it that 5 minutes before it, and then come back and do it again, then it's solid. Then it's solid. That means it's confirmation that we okay, Doug. Then you was right, Doug. If this thing did that the first time, it came back to do it the second time, then you were right. I'm gonna go ahead and get in there. I'm gonna go ahead and buy that 1150 call contract. You saying that it should go up to 1150? I'm gonna buy it right here at 1116 because you said it on the watch list. And then guess what? If you went and bought it at 10:05 a.m., all 10:10, it went up. 10:15, it went up. 10:20, it went up. 10:25 sideways, 10:30 sideways, 10:35 sideways, 10:40 sideways, but never came back down to where you got in at. 10:45 sideways, 10:50 sideways. Look, 10:55, it came up, closed at 11:36, and 11 o'clock, it went all the way up to 11:48. And you go ahead and get out. If you don't get out here at 11 o'clock, at the highest point at 11:48, you said it was going to go to 11:50. It went up to 11:48 for you. You ain't get out right there. Cool. It gave you 2-3 more chances to get out. But all of this, though, from when you got in here, when you went and bought your contract, your 1150 contract, saying it was going to go up to 1150, all of this, that's how we got money. So we paid maybe $15 for the contract here. The price was going up to $11.50. That contract was you was selling it for maybe $25, maybe $30, and that was your benefit right there.
Your profit. Yep.
That's how it goes.
Okay.
So this tells us the levels to go buy that contract.
Mm-hmm.
This shows us the level and gives us a visual to strike or not. And this is what we're going to buy, that contract and the price. But you
Okay.
need to go and watch this video because I'm just going over this briefly. These ask price is important. The
Okay.
bid price is important. When we buy a contract, we need to buy to open, right? When we sell a contract, we need to sell to close and sell for the bid price. Okay. So all of those pieces are important to enter a contract and to close a contract. And those pieces I give on the in-depth
Video.
option chain video. Yes, ma'am. But the process and procedure we just went over is clean, cut, clear. That's what we do. That's how we do. And that's how we get paid from our contract.